Financially Focused Photographers Live. So this is a training I'm putting on for everyone inside of my free community, Financially Focused Photographers, on Facebook. So most of you that are here already are in there. If you are seeing this somewhere else, please come join us on Facebook. Today, we're going to talk about the 6 taxes every photography business owner needs to know about. Real quick, if you haven't met me yet, which I think you all just did, but I'm Tiffany Bastian. I am the owner of Bastian Accounting, where my team and I work exclusively with photographers. We help them take their photography business to the next level with accurate bookkeeping and tax planning. So right here, it says what's an EA. And I kind of always like to hit on this and go over it because I think I just want to be clear on what that is. So I do have a master's in accounting. However, an EA is not an executive assistant, although I found out recently that is also an acronym for that. It's an IRS enrolled agent. So what that means is a CPA takes a 4-part exam, and one portion of one of those 4 exams hits on taxes, right? So unless a CPA fully dives into tax law after obtaining their CPA, they may not be a tax pro. And the other piece is that CPAs can only practice in the states in which they are licensed. So an IRS enrolled agent is a 3-part exam through the IRS. One is personal tax, one is business tax, one is ethics. And then I have to do 73 hours of continuing education. CPAs do continuing education as well, every 3 years. But all of my education is in tax, and I can practice and I can serve clients in all of the states because I am certified through the IRS. So that is the difference. And I just want to make awareness of that because there is more and more enrolled agents. There's an entire website on the IRS website where you can actually go look up enrolled agents in your area. So just trying to, bring some, truth to where people think they have to get a CPA in their state, because yes, if you get a CPA, they do need to be in your state because of how that credentialing works. But an enrolled agent you can work with no matter where they're located. And so that's the beauty of Bastian Accounting, is that we work with photographers all over the United States, and we specialize in photography. So we're able to serve our clients deeper. All right. So there's enough about me. Are you guys ready to dive in today? Let me see in the chat. Comment below. Tell me, are you ready for the content of the 6 taxes? I know, who wants to... Taxes in general, I feel like makes people cringe. So I'm so excited that you're here learning about all 6 of them. And hopefully you're not too nervous about okay, what are the other 3 I didn't know about? Probably, right? Is what you're thinking. So here we go. There are 6 different taxes that you need to be aware of. They may affect your photography business. I'll walk you through each of these today and answer your questions at the end of this. So if you are live, if you register, if you go to bastianaccounting.com/register and you are live, you get the full Q&A. So if you're watching this elsewhere, make sure you get registered for the next training so that you can be in on the full live Q&A that everybody who's currently here with me is going to get today. So here they are, my friends. We have the federal income tax, state income tax, payroll taxes, sales tax, right? Self-employment tax, and estimated taxes. Tell me in the chat or in the comments, are any of these new to you, or are you not realizing, did any of these surprise you? Or now that you see them all laid out, are you okay, I've heard of all of these. Now, how do they pertain to me? Yes, I'm seeing sales tax is something I've always been unsure of. And yep, sales tax, I would say, is the biggest pain point for, quite honestly, any small business, to be fair. But photographers specifically coming into our one-on-one services, that is one of the biggest things that we find, is that is where they've been struggling, whether they have been paying it or charging wrong, or not registered, or collecting it but not paying it, or collecting it but not registered. It's so common. So you are not alone in that, friend. The first tax we'll cover is federal income tax. Federal income tax is a tax imposed on your income by the IRS, and it must be filed annually. Federal income tax rates depend on your income tax bracket and range from 10 to 37%. So this is going to be that tax return that you are filing at the end of the year, right? And most of you are familiar with that. Everyone who earns income in the United States has to file a federal income tax return. So we're all on the same page with this one. This affects all of us. This is probably the one we're most common, is most common for us. It's the 1040 form. And when you're self-employed and not an S corporation or a partnership, you file a Schedule C with your income tax return. Next, we have state income tax. This one gets neglected a lot. State income tax is just like federal income tax. It is a tax imposed by your state on your income. You file this as well at the end of the year when you're filing your federal income tax. State tax rates range from 3 to 10.75%. So if you're following along already, okay, let's just 10 to 37%. So if you went to the high end, even if you were just like trying to meet somewhere in the middle at 25%, right? I mean, the average is going to be somewhere between 24 and 30 for federal based on income, but now you're adding another 3 to 10.75% on top of that, friends. Depending on your income bracket, so that also plays into this, but there is actually 9 states that don't have income tax. So if you are in one of these states, lucky you. Not every state has income tax. 9 states don't. That is Alaska, Florida, Nevada, South Dakota, Texas, and Washington state. Wyoming has a levy tax, but not an actual income tax. And New Hampshire and Tennessee do not include taxes on wages, but they do tax things like interest and investment income, but they're actually soon going to be doing away with that as well. So make sure you stay up to date. If you live in one of these states, if you're in New Hampshire, Tennessee, make sure you stay up to date with the tax laws. So now we talked about federal income tax, right? So you be paying federal income tax somewhere, like we said, 10 to 37%. Then you're in a state that has tax, right? That's 3 to 10.75%. Now you have to add on top of those taxes, self-employment tax. And what is that? So in addition to federal and state, you will also have to pay self-employment tax. Self-employment tax is 15.3%. This tax is paid on top of those other taxes, guys. So that's, you can start to see how this can add up quickly. This is a tax imposed on self-employed individuals who are not S corporations. If you file a Schedule C with your return or your partnership, like a multi-member LLC or a single member LLC, the tax, your tax is income minus expenses, and that equals your net income. When you multiply your net income by 15.3%, now you can figure out about how much self-employment tax you're going to owe at the end of the year as well. When you're on the payroll, you pay Medicare and Social Security, right? So when you worked for somebody else, you had these things taken out of your paycheck. When you're an S corporation, you have to be on payroll inside of your company. And again, these are taken out of your paycheck. But when you're not an S corporation and you're self-employed, you're not paying into Medicare and Social Security for your future self. So this is the IRS's way of requiring you to pay into Medicare and Social Security out of your earned income from your self-employment. The IRS puts this money towards your future Medicare and Social Security so that you can collect Medicare and Social Security when you're older. I'm not going to go into details here, but another benefit to becoming an S corporation is that you don't have to pay this. I teach about how S corporation is amazing and how it saves you so much on taxes inside of the Legit Photographer Collective, which will be launching in November. So if you want to check out this website at some point, make sure you get on the wait list for that. But we go deep into these taxes. I just want to give you an overview today to make sure they're all on your radar. So kind of similar, but now we have payroll tax, right? So I know earlier someone was saying, well, does payroll tax apply to me? Well, you can be, and again, I'm going to say S corporation is, you have to be an LLC to be an S corporation. Okay, so S corporation is in its own bubble. And so anytime I'm talking about this stuff today, I'm talking about the non-S corporations. That means sole proprietor, a DBA, a single member or multi-member LLC or partnership that has not elected S corp status. You cannot pay yourself. You can take draws from your business, but regardless of how much you take or you put back into your business equity, everything you pay, all these taxes we just talked about on the net income regardless. So if you're profiting of $50,000 and you're like, but I never took a penny, it does not matter. You owe it on all that $50,000 profit. Again, the S corp then allows you actually have to pay yourself on a salary through your business, which is a deduction to your business. Because of that, you're paying into these taxes, which are also being deducted from your business, because when you are not an S corporation, again, back to the other side, you actually are paying all these taxes essentially out of your pocket because there's no such thing as a business tax, which we're going to talk about the week after next on November 3rd. So make sure you register, go find that replay. But yeah, so payroll tax is something, it's what we were just talking about. So when you have a paycheck, they will withhold your federal income tax, right? Because we talked about that one first. They will withhold your state income tax. They will, there's no self-employment tax on this because you'd be an S corporation. However, if you have employees, you cannot pay yourself through payroll unless you're an S corporation, but you may have employees as an LLC or any of those other business structures we just mentioned. So you're going to withhold the employee's income tax, their state income tax if need be, if they're in a state that has income tax. You're going to withhold the Medicare and the Social Security. So not self-employment tax essentially, but you're actually withholding this Medicare and Social Security as well. So all of that makes up the payroll tax for your employees, or all of that makes up the tax for yourself when you're an S corporation. But again, that advantage is when you're on payroll inside of your company, all of that's deductible to your business, right? But when you're not, that net income comes over to your personal tax return, and out of your own pocket with no deductions from your business, you pay the federal income tax, state income tax, self-employment tax. Make sense? You guys on the same page? Let me know in the comments below and the chat. So on your pay stub, various withholding and deductions. So we just talked about if you're an S corporation, how these really it applies to you more so and is more beneficial to you. But mostly this would be if you have employees on payroll, those are all the taxes. So when you're like, oh yeah, I'm going to hire an assistant for the studio and I'm going to pay them $20,000 a year, you have to take into consideration you are going to pay them $20,000 a year, but there's certain parts of these expenses that you actually pay for as the employer. So the federal income tax and the state income tax are going to come out of the employee's pay, but you're going to pay a portion of that Medicare and Social Security and some other things like unemployment, depending on your state, but just to be aware of what those things are. Estimated taxes essentially is all those taxes we just talked about. So taxes are a pay-as-you-earn system. So income tax for your state and federal government. The self-employment tax actually is paid at the end of the year on your tax return. So that's a little bit different, but you are required to calculate your federal and state income tax due based on net income each quarter and make quarterly estimated tax payments. And it's very crazy to me all the time. I run into photographers who are like, what? I didn't know I had to do that. Or I thought I had to make a certain amount, but it is required. I always challenge people to go look at their form 1040. So that is your federal income tax return. And it was one page prior to 2018. It is 2 pages now. On page 2, near the bottom where the signature area is, there's a box that says penalty for not making estimated payments. So if you owed money, and sometimes even if you're getting a refund, if you didn't make those timely estimated payments, there's actually a number there. And a lot of people, H&R Block, these kinds of people, they don't actually tell you that's there because they'll just be like, here's what you owe, or here's what's due, or whatever. But they never actually break that down for you. So I would challenge anybody here watching this to go look at your 1040 in that area near the signature field on the 1040 form, page 2, and see what you got there. But these are not optional. And the other thing about estimated tax payments is cash flow. It's earn as you go, pay as you earn, right? So wouldn't it be much easier to feel like, okay, I'm at this quarter here, and here's where I'm at calculating and make that payment now as cash is coming in, than to get yourself to January, February, maybe even April, or God knows, file an extension and get to October the following year, and you don't have all that money to come up with. And now you got to set up a payment plan. Now you got to pay interest. There's penalties if you don't pay it on time. Like it can be a nightmare. My point to all of this is, again, in the Legit Photographer Collective, we go deep into estimated tax payments, and you get access to Tax Planner Pro software. I show you how to use it. It links to your QuickBooks, show you how to pull a tax plan, how to strategize. There's a bunch of strategies in there to help you now that you know what you owe. What can you do to lower that tax before you even make those estimated payments, which is super important. Why give the IRS or your state more money than you need to just because you're not sure of the strategies? And again, this is part of planning. If you're doing all this in April or the October of the next year, you've lost all your strategy because you've left the year behind. So let's do this in the year. There's just so many benefits to this, but also it's not optional. So tell me in the comments of the chat, how many of you had no idea these were not optional? And how many of you are actually pretty diligent and get your estimated taxes calculated and paid? Most tax professionals, I do tax planning with my clients one-on-one, and a lot of people that do tax preparation will provide clients with vouchers. Those vouchers are based on the prior year's taxes, so they're not always accurate, but they're better than nothing. Nothing is better than calculating each quarter kind of where you're at to really make sure that you're putting the right amount aside. All right. So now, as I wait, is everybody good with estimated taxes and ready to go into sales tax? I kind of wanted to fix that order here just because I think that those all sort of lump together, and sales tax is a little bit of a beast we're going to tangle together. I just started paying estimated taxes in January this year. Doesn't it feel good though? Like to know, I mean, I'm going to tell you, this all comes from my own experience. You guys, my business grew very quickly. This happens to a lot of photographers. They take something from a hobby or a passion and suddenly they're like, oh my God, I'm making a living at this. Oh my God, I got to pay taxes. Oh shit, you know? So the thing is, like, I had that same thing happen to me. And then I was like, I had this $29,000 tax bill and it was a nightmare because it just grew out of hand. So I started my own tax planning and that's what I implemented for all of my one-on-one clients. And that's what I teach in the collective, because it's important to know how to do that stuff. It's going to save you headache later. Your cash flow isn't going to be like, it's daunting when you have some big total at the end. But also let's talk about the strategy. Like, if you're at this point, what could you do in Q1? Like, could you set up an IRA? Should you become an S corporation? There's all these options available to you to figure out how to strategize and keep more of what you're making when you do estimated taxes, which are basically tax planning. Turns out I ended up paying a $3 fee the previous. Yes, thank you, Sarah. So Sarah, that is what I'm talking about. People don't realize there's a lot of times there's penalties on the end of that return that nobody tells them about. All right, sales tax, here we come. All right, sales tax. I can just hear, ugh. I know this is no one's favorite tax, but sales tax is a tax imposed on businesses by states on services and goods. So it's not bad enough that you are paying a federal income tax and you're paying a state income tax, and then you're paying self-employment tax. But then now the state is like, I want a tax on what you're selling in the state too. And so the fun story is, some of the states that don't have federal income tax, or sorry, some of the states that don't have state income tax do have a sales tax. So you don't get out of it. Well, one way or the other, they're getting something from you. Sales tax is different in every state. This is a huge issue because it's just like any Facebook community. People ask other people questions or advice on sales tax, not realizing that it's based on the state that you're in. It's based on what your business model is. Are you selling digital prints? Are digitals taxable in your state? Some states tax digitals, some don't. Some tax services, some tax the digitals if there's a service. I mean, it's very, very confusing. Doing business in a state could subject you to sales tax. So if you are traveling for a wedding, now you've entered a whole new realm of what taxability is, because every state has rules for businesses within the state, and every state has rules for anyone coming into their state to do business. So you want to make sure you know what those rules are. And a lot of them are on the honesty system, but I'm going to tell you, I'm always about community over competition, but who's going to blow somebody in is going to be another photographer or someone else who doesn't like your pricing because or compares you to someone who is charging the proper tax in that state and you're not. So just always keep that in mind. But there are 5 states that do not have sales tax. So that's Alaska, Delaware, Montana, New Hampshire, and Oregon. So those states don't have to really worry about sales tax, but many, I think, except for New Hampshire, the rest of them have a state tax, right? So they get you one way or the other. And New Hampshire is looking like a pretty attractive place to live. Yeah. Anyone? They don't have either. But yes, so sales tax and it's so important to know because, the other part about, sales tax is that based on the state, each state has their own rules, but some states are destination based, which means the rate you charge is based on your client's address, and some are origin based, which means the rate you charge is based on your business address. So you want to make sure you understand these things. I would tell you in this video, if you just go to bastionaccounting.com, BASTIAN accounting.com, and you scroll down, I have a free state-by-state sales tax guide for photographers where I break down every single state. So if you are watching this and you have not downloaded that gem, make sure you go and snag it off my website. It is a free download, and it was my passion project for a while. I have communicated and contact every single state, working through what is resident. So if you live in that state, and also what you do if you're destination traveling to that state. So make sure you get that guide. And I'm going to go ahead and just pop up here just for your information, the Legit Photographer Collective that is coming in November. I hope that you all join me there. It's actually, let's pull it up with the URL here. We have a couple different slides. Make sure this date is incorrect, I shall say. It is actually going to be more like mid-November. So if you're watching this after mid-November, you're all good, but make sure you get on the wait list. This is going to have so much. I cannot wait. It is going to be an entire experience to join me inside the collective, where we are going to go deep on all of these topics, where we are going to have live Zoom calls. We're going to have monthly master classes. I am so excited for you. Get on the wait list. I'm going to go ahead and jump on camera here and pull up this question tab. And again, if you are watching this anywhere but live with us here, we do a live Q&A after each weekly training. So make sure you go to bastionaccounting.com/register to get on the list so that you're in the live event, so that you get FaceTime and Q&A. Otherwise, this is where the journey ends for us in the recorded realm. And I'm going to jump on camera and answer questions for you guys. So I'll be right there. Let me go ahead and just swap this out.